Good afternoon, everyone. It is Wednesday, March 12th. We're going live here now. Take you into the SNES Tech earnings conference call at 5 p.m. Conference call coming up at 5 p.m. Eastern. Let's put that in over here. At 5 p.m. Eastern. Let's put that up so people know. All right, so we got that coming up. We got some time. We'll talk about the SNES Tech ER in just a second. Some news out here. Intel, new CEO. I don't know who the guy is, but that's a big deal. It really is a big deal. I'm not surprised the stock is up so much. But I don't know who this guy is. Let's see, 23.15. The 20 DMA over there is at 22.93. This is a tough market, I got to tell you. Very, very tough market. Look, it's story trading. Our process starts with the catalyst, and then we make predictions on rapid re-rating targets based on our interpretation of how that catalyst impacts sentiment, how it impacts fundamentals, and then you triangulate. You look at the chart, you look at the technicals, and that's a. And I always say, anytime I'm on, especially on those Wolf Financial Spaces shows, that for our process, we like stable markets. Now, I don't care if it's stable in a bear market, that's fine. Stable in a bull, whatever, just stability. I don't even like it in a bull market when you get these melt ups in price. That also messes with our process, because then you have like all of the, I don't know what it is. It's like flow issues. Like everyone goes crazy to the upside, going and stuff that stocks that maybe don't deserve it or whatnot, and the vice versa is happening now when there's liquidity issues. I don't like it. I don't like those kind of markets. Some people maybe thrive on it. I like stability in markets. So stocks can trade based on their own individual catalysts. Okay, that's our bread and butter. That's why we're up. Man, this year still at Story Trading, my official trade account is up some 84%, I believe. I definitely took a big hit here in the last few days. At the peak, I think I was up 110% year to date. So only up 84% year to date now. And since we started tracking this in our Discord in October, still up a few thousand%. So we've had a tough time, absolutely, especially this week. All right, because I kind of called the bottom on Friday. At least I thought we'd get a short-term technical reprieve, and that didn't work. So I got like hammered, really hammered the last few days. But that's the story here, in QQQ and SPY. And, I'm not going to get into the macro. We have 15 minutes here. I want to get into SNES Tech. But, we're just looking for market stability. That's what I'm looking for. If the market basically accepts that we're in a bear market, that'll be great. That'll be great for stock picking. It's going to work. Okay. But right now, it's just this money flow, indecision, liquidity issues, and that just messes with uh, predictability of how an individual company reacts to catalysts. So, anyway, you know us well, Story Trading. You should know us well. Our 4-pillar process: sentiment, catalyst, sentiment, fundamentals, and technicals. Rhett, how you doing?
Pretty good, Ben. Pretty good. Can't complain.
Okay, great. So we want to carry this SNES Tech. Just for full disclosure, SNES Tech is a paid sponsor of the Story Trading community. They help us keep the lights on. And what we do is just amplify their content, amplify the news. So people, it's a very small company, people don't know about it. Market cap is 2 million. So they got their earnings out today. All right. So we're going to let you know about that earnings report. We're going to live stream the conference call here in a few minutes. And we're going to interview the CEO tomorrow morning. So our pre-market show will be carried live to the public tomorrow at 9 a.m. And that'll take us right into the CEO interview at 10 a.m. with Joel Fruitt. That'll be tomorrow, SNES Tech CEO. Now, today, the stock is up 15% here. SNES Tech announces record fourth quarter, and that's always good when you have record in there. Record fourth quarter and full year 2024 financial results. All right, with 70% quarterly revenue growth, gross profit margins of 61%, reduction in operating expenses, and dramatic improvement in adjusted EBITDA. I think in here they said it was their best adjusted EBITDA in company history. A couple other really important points in here. They raised $2 million in the quarter during the first quarter, right? So this is the fourth quarter results. So fourth quarter results, 1.3 million cash at the end of the year. But then subsequent to that, in the last couple of months, I guess they've raised $2 million through the ATM and through warrant exercises. Okay, so now they got some cash. They got, I guess, around $3 million in cash to execute on their business plan. But very important here is that they've cut their expenses and reduced the threshold for cash flow break even to 7 million annually from 12 million previous. So they've cut their cash flow break even from 12 million to 7 million. That's a big deal. That's a big deal. They're still a ways from 7 million revenue. In the quarter, they did where is it? Quarter they did 500,000, right? So that's annualized. That's only 2 million. They need to get from 2 million annualized to 7 million to get the cash flow break even. But we'll see. There could be a path there because they just recently got into all these big box retail stores, Ace Hardware, and are they in Home Depot? They're in
No,
Walmart, I think.
it's not. It's Tractor Supply.
They're in
So
Tractor Supply, but they're also in Ace Hardware.
Oh, they are.
They
Nice.
are. I don't know if they announced it, but I mean, I don't know. Is that? I'm sure it's public because they've told me about it several times when when I interviewed them privately to learn about the company. I don't know if they're in all the Ace Hardwares. Maybe they're tested in smaller areas, but
Mhm.
in the last several months, they've just been rolling out to all these big box retailers. So that's the key here. Is
I wouldn't say. I would just say the past 2 months it's been
the
for them.
past Right. So I don't think any of this is really reflected in the 500,000 Q4 results. So on this conference call, I want to hear, are there signs? What kind of indications can they give us about growth in Q1? Early indications from being in these big box retailers. That's what I want to hear about. In a previous interview I had with them, they did indicate. I initially was excited about this company because of like New York City subway, if they ever get it. But that's like a huge project that, yes, it will bring millions upon millions of dollars, and inner cities are also being pilot tested in Baltimore and in New York. But they've indicated in the conference call in the first interview I had with them, that the path to an inflection this year. What's more likely to see a revenue inflection this year in calendar 2025? It's the big box retailers. That's what they're excited about this year. So that's why we want to see if there's any traction in that. Right, if you don't mind, send an email over to the team over there at SNES Tech. Just let them know we're going to be live streaming this. Maybe give them a live stream link and let them know how many people are watching, because I'm sure they monitor that on their stream, which it's not going to be reflected. Obviously, they're not going to know. Let me see. Okay, here, webinar started. Actually, okay, so I got the webinar and the music up there on my other screen. I'll put on the audio just shortly before 5 p.m. Okay, so while we wait for that, let me see. There's a comment here. Market can stay below this. Oh yes, absolutely. Market can stay below this 200 DMA for a very long time. For the record, I'm pretty bearish right now. I've taken let's talk about the macro for a second right now. I have a pretty bearish outlook for the market, but really only for the first half of the year. I hope. All right. I hope the administration does the right things to basically take this. The thing that I'm worried about, I'm not so worried about tariffs. I don't think tariffs are a big deal. The market's obsessed with tariffs. I'm not. I really think it's a nothing burger. The thing that's a big deal is all the government cuts with Doge. All right. And I think the market's going to be surprised. I think you're going to see inflation come down very rapidly because of the impact of austerity. It's like you got, like, I don't know, hundreds of thousands of people losing their jobs. You got hundreds of millions of billions. You have maybe hundreds of billions of dollars coming out from government spending, which are in the form of grants and contracts and things like that. And then the trickle down effect of that, right? Trickle down economics works both ways, right? The trickle down effect of that is a dramatic impact on jobs and people feeling secure with their money. I think the consumer has already pulled back, and I think this Doge has already impacted prices. You can see it in Truflation data. All right, the Truflation has like a nowcast of like 1.3% inflation, and that is a big thing nobody's talking about. Ultimately, I think it's a great thing. Okay, I think it's going to more than counteract the inflationary effect of tariffs, and it's going to allow the Fed to cut interest rates. So I'm very excited about that. Yet at the same time, this is a dramatic impact on GDP and can cause a recession. All right. So look, Donald Trump is transforming the economy. Basically, if you want to sum it up, you're taking a big portion of the GDP and taking it out of the public sector into the private sector, and that's painful. That's a process that's going to be really painful and is going to keep, like as U.S. Records ENT is saying, it's going to keep. It could keep markets below this 200 DMA and in a bear market for a while, for several months, maybe more, maybe a quarter or two. I'd like to see the administration make some efforts to help to reabsorb these public sector people into the private sector. I think they need some retraining, for sure. I think if they acknowledge that, they need to acknowledge the pain. Forget about this talk about tariffs. Tariffs are just a footnote. They're nothing compared to the impact Doge is having. They need to acknowledge the impact Doge is having on the economy. They need to acknowledge the challenge of taking all these people and all this productivity and GDP out of the public sector into the private sector, and acknowledge it and say, okay, we're going to have some programs to help make that happen, help make these people transition to the private sector so that we can actually increase productivity in America and increase GDP and output more useful stuff instead of all the wasteful stuff that they were doing in the government. Um, so this is why I'm bear, but at the same time, I think this is going to be very good for interest rates. I think this whole inflation thing with tariff is not going to be a big deal at all. I think it's a nothing burger compared to Doge. So we're going to have a path to lower interest rates. I think the second half is going to be much, much nicer than the first half. And you never bet against America. And we'll be back at all-time new highs, I think, probably before, for sure, before the end of Trump's first term, in my opinion. But it's going to be very painful here in the short term. I mean, this is a radical change, taking a potentially, as Elon Musk says, taking $1 trillion out of the government and putting that in the pockets, putting it in the private sector. Well, in any case, that's my answer to you. U.S. records, ENT, with this comment you had here. Yes, we can stay below the 200 for a long time. I was playing a bounce here. So this is where, as of Friday, I was still up 100% year to date. The last 3 days, I got it wrong. I thought Monday would be a big bounce. Donald Trump came in with that Maria Bartiromo interview on Sunday and put a kibosh on things. And I was hoping, I didn't want to just panic sell on Monday. So let me see if we can get a bounce back to the 200 and I'll sell there. And that is just a tragedy for me here the last few days, because I loaded up Friday, then I bought more here the last couple of days looking for a CPI bounce. I got a very weak, terrible CPI bounce and a hard day to trade today. And I thought that was going to be my exit. So yeah, I had to take some losses this afternoon. I'm about 75% cash, but to be honest with you, might need to be like 100% cash in my day trading account, my swing trading account, and just kind of day trade thing till things get better. In any case, I'm talking a lot, Rhett. Here's Intel holding above 23. Definitely a very interesting catalyst. I scalped it a little bit in after hours, like in at 23 out of 23.30. So I'm like, I heard the news late. If I saw that news early, it would have been all over it. I did not see it in time. New CEO, that's a big important catalyst for Intel.
Yeah, huge.
Okay, still got that. So we'll be up in just a couple minutes on the SNES Tech conference call.
We actually just deployed some Evolve out of my girlfriend's farm.
Are you serious? Did you hear about it before?
Huh?
Or did he hear about it outside of story trading, or how did he hear about it?
Just from us. And then on Tractor Supply, when you look it up now for the rats and mice, they popped up when we actually were looking it up on Tractor Supply because I was telling her my girlfriend's dad about it. But I mean, we used rat traps and all that other stuff, but you can't kill them fast enough, like they said. So it's the repopulation issue that's the major issue there. So
interesting. So you just deployed it how long ago?
This past weekend. So
okay,
we'll see.
So like I'm hearing it takes I think officially they say 2 to 3 months, but I think most people see results in 4 to 6 weeks or something like that.
That's what they're saying, yeah. And then also they see a 95, I think, success rate after 6 months.
So this is just a fascinating opportunity. Let me just SNES Tech big picture overview before we go on the CC. The thing that has me by the way, I did buy shares in this company, full disclosure. I actually usually don't when it's a sponsor of story trading, but the opportunity here, it's when you compare, actually the market cap's going to be bigger now because of the ATM they did. We'll find out more during this conference call, the ATM and the warrant conversion. But if you compare the market cap to the TAM and to the effectiveness of their product, and there's no competition, right? It's just if they turn the corner, if they can get some momentum in sales and get to that cash flow break even, I mean, this thing is a multi-bagger for sure. 3, 4, 5, 6x. So that's the intriguing part of this opportunity. Huge TAM, no competition, very effective, great reviews. What about the debt? I don't think they have debt. Yes, they do have outstanding warrants that's how they got 1 million warrants to convert. They basically gave them new warrants to convert the old ones. So they said, all right, convert now at $2.90. The stock's now $2.60 in after hours. So they got a good price at the $2.90, but they had to issue them new warrants at $2.90. So I think it was they converted 1 million. They converted maybe 500,000 or so. 3, 4, 500. I think they converted between 3 and 500,000 warrants at $2.90. So they got $1 million out of that. But then they gave them another $1.5 million at $2.90, so they can convert that in the future. That's how they did that. They induced it, right? They gave them a benefit. They gave them like free warrants if you convert the other ones at 290. That's how they raised that money. So there are now 1.5 million warrants outstanding at 290. I don't believe there's any debt. I don't believe so. Good question. You can find it in the filings, or we'll just ask the CEO tomorrow. Intel looking good, curling up. But anyway, let me reshare my screen and put the audio on for this conference call. 1 second. Okay. Can you?
Yep, we can hear it.
Hear the music. Beautiful. So we can hear the music. I gotta tell you, if markets were more stable, I'd probably swing some Intel until tomorrow, but you can't really do that now. I just wish I was early. All right, SNES Tech, let's look at technicals. 266 by 270, some nice after hours volume. This is the gap from inducing those warrants at 290. We're right into that gap right now. So we got the 20 DMA. I think that 290 to 3 definitely could be a resistance area because that's also the strike price. Angel in the last 2 days, but it depends all when he got in, right? If he got in way up here, you're screwed. But I've been watching CRD closely. I did trade CRDO successfully today a couple times, and I think I kept some. Yes, I did keep some to swing into tomorrow because this CRDO looks great, gapping back above the 200 DMA with a low RSI. Could have a few more bucks in it. CRDO for sure. So the music is too loud. I'm hearing the music is too loud. I don't know how much I can control that on my end. Maybe the system audio on your end. Let me think if I can control that. Music too loud. Someone's saying. Let me see. That mutes it. Is it too loud for you, Rhett? No, right? It's not too loud for me either. I don't know, Kira.
I'd say just turn it down on their end on their phone if they can a little.
Yeah, anyway, and if it's too loud relative to Rhett and I being too quiet, you won't have to worry about that in a second because we're going to go silent here. And on the other end of this, at the end, I gotta leave the office early. I'll be continuing to listen from my phone, but I won't be able to participate at the end of the call. So Rhett will have some closing comments here at the end of the conference call, and he'll say goodbye to you guys. But for now, let's tune in. Here we go.
Good day, and welcome to the SNES Tech fourth quarter and fiscal year 2024 financial results conference call. The star key followed by 0. After today's presentation, there will be an opportunity to ask questions.
Yeah. Okay.
To ask a question, you may press star then 1 on your telephone keypad, and to withdraw your question, please press star then 2. Please note today's event is being recorded.
I can.
I'd now like to turn the conference over to Robert Bloom with Lytham Partners. Please go ahead.
All right, great. Thanks so much, and thank you all for joining us today, as the operator mentioned, to discuss SNES Tech's fourth quarter and full year 2024 financial results, and this for the period ended December 31, 2024. With us on the call representing the company today is Mr. Joel Fruent, the company's Chief Executive Officer, Mr. Tom Chesterman, the company's Chief Financial Officer. At the conclusion of today's prepared remarks, we'll open the call for a question and answer session. If you dialed into the call through the traditional teleconference line, as the operator indicated, please press star then 1 to ask a question. And if you are listening through the webcast player and would like to ask a question, you can submit your question through the Ask a Question feature in the webcast player. Before we begin with prepared remarks, we submit for the record the following statement. Statements made by the management team of SNES Tech during the course of this conference call may contain forward-looking statements within the meaning of Section 27A of the Securities Act of 1933 as amended, and Section 21E of the Securities Exchange Act of 1934 as amended, and such forward-looking statements are made pursuant to the safe harbor provisions of the Private Securities Litigation Reform Act of 1995. Forward-looking statements describe future expectations, plans, results, or strategies, and are generally preceded by words such as may, future, plan or planned, will or should, expected, anticipates, draft, eventually, or projected. Listeners are cautioned that such statements are subject to a multitude of risks and uncertainties, that could cause future circumstances, events, or results to differ materially from those projected in the forward-looking statements, including the risk that actual results may differ materially from those projected in the forward-looking statements as a result of various factors and other risks identified in the company's filings with the Securities and Exchange Commission. All forward-looking statements contained during this conference call speak only as of the date in which they were made and are based on management's assumptions and estimates as of such date. The company does not undertake any obligation to publicly update any forward-looking statements, whether as a result of the receipt of new information, the occurrence of future events, or otherwise. All right, with that said, let me turn the call over to Joel Fruent, Chief Executive Officer. Joel, please proceed.
Thank you, Robert, and good afternoon, everyone. Thank you all for joining us today for our fourth quarter and year-end conference call. So let's jump right into it. As you saw in the press release, we concluded a truly transformational year for SNES Tech with record financial results across the board, including quarterly revenues, which were up 70%, and quarterly gross profit margins of 61%, which when coupled with our improvement in our operational efficiencies through cost reductions, resulted in our smallest quarterly adjusted EBITDA loss in company history as we advance our progress towards profitability. On top of the record results and efficiencies already implemented to date, we are also implementing additional initiatives effective immediately, which are set to further reduce cash burn by $2 million on an annualized basis. These new savings, coupled with the higher gross margins from Evolve, are anticipated to reduce the revenue threshold for cash flow break-even to $7 million annually, compared to $12 million historically. I will ask Tom to expand more on some of these new initiatives to lower costs in a moment. But let me state up front that our goal is to achieve cash flow break-even in the near term, which we believe serves as a significant inflection point for the company. To that end, as Tom will touch on momentarily, we believe the strategic financing we just completed this week will provide us the capital necessary to accelerate our progress to cash flow break-even. But first, back to the dramatically improved financial results announced this past quarter and the progress it highlights towards that goal of cash flow break-even. The improvements are being driven almost entirely by the introduction of our Evolve Soft Bait Fertility Control Solution, which was launched a year ago. Its improved form factor, economical price point, proven efficacy, and lengthy shelf life have allowed us to expand distribution into new retail customers and in markets. Evolve continues to be a game changer for SNES Tech, as well as for the industry. As we have communicated to you for a few quarters now, we have identified a number of key growth objectives that will allow us to continue the positive trajectory we are on. Let me take a moment to walk through the updates on each of these. First, during the year, we successfully launched Evolve Rat and Evolve Mouse on numerous online retailers, including Amazon.com, Walmart.com, and DIYPestControl.com. Inclusive of the company's online store at SNEStech.com, overall e-commerce sales increased 206% during this year's fourth quarter compared to last year's fourth quarter and represented 55% of Q4 2024 revenue. We are still in the early stages of reach here, with TractorSupply.com coming on in just the last few weeks. We also have seen a nice uptick in our municipal programs. As we discussed briefly last quarter, the New York City Council has approved a bill to implement a rat contraception pilot program. I am pleased to confirm that we received an order from New York City in December 2024 for Evolve Rat, and that will be shipped in April. The product is initially expected to be deployed in a few locations throughout the city and expand from there based on success parameters being met. Beyond the New York City government deployment, we also signed an agreement with Bug Off Pest Control in New York City as we work directly with customers to implement contraception into their IPM programs. And beyond New York, in January of this year, the city of Baltimore joined other major cities on the Rattiest Cities list, such as Los Angeles, by integrating Evolve into their integrated pest management strategy. The city placed a substantial initial order for Evolve and is currently deploying the product this quarter as part of its integrated pest management program. Programs have also just begun, and orders received in Chicago and the Boston area. While everyone loves to talk about the municipal orders, there are a number of other in-market customers that can be significant growth drivers for us going forward. One of these is the warehousing and distribution sector. Just last week, we announced the shipment of a substantial order of Evolve to one of the largest warehousing and distribution companies in the Midwest. As you might imagine, the warehousing in the United States is huge. Controlling rodent infestations in facilities that store food supplies present unique challenges, as the use of traditional poisons is often not feasible due to safety concerns. Evolve offers a humane and effective alternative, ensuring the integrity of stored products while maintaining compliance with industry regulations. We are excited to expand into this exciting new vertical. Another key area for us has been to expand our reach internationally. Again, Evolve, with its soft bait form factor, has permitted this to occur. To date, we have signed distribution agreements in 10 separate countries to distribute Evolve, including a letter of intent signed with Esmar Corporation in India just a few weeks ago. As we have communicated in the past, international distribution often requires country-specific registrations efforts. To date, we have obtained approval and shipped product to Hong Kong, the United Arab Emirates, the Netherlands, and the Maldives. Our distributors in Australia, New Zealand, and India are in the final stages, with large orders already set to be shipped upon approval for both countries. Others continue to work through the registration process, and we expect further approvals during the remainder of the year. Another key initiative we have been working on has been brick and mortar retail chains. During the year, we launched Evolve in Ace Hardware stores and brought on manufacturers.
Oh, Ben, hold on 1 second. We lost. Hold on, guys. Let me call Ben real quick. Oh, here's my phone. Ben. Oh, he's back.
Our progress on e-commerce and the individual store orders.
Can you hear it now?
Yep, we're perfect. Thanks.
Discussions. So those are the key drivers that led to the rapid growth this past year, and the fourth quarter in particular. Growth in e-commerce, expansion into municipal markets, expansion into new end markets, and expansion internationally. Our team continues to aggressively pursue each of these areas and others to bring our Evolve solution to the market. And as I stated at the beginning, as this growth continues, which when coupled with higher gross margins and lower operating expenses, it positions us well to achieve our goal of cash flow break even. With that, let me turn the call over to Tom Chesterman, who's going to review the financials in more detail. I will then wrap up with a few closing comments before taking questions. Tom?
Thank you, Joel. We will be filing our 10-K shortly, but let me hit the financial highlights. But start with what Joel mentioned at the beginning, was the strategic financing that we completed this week. It doesn't look like much at first glance, a warrant repricing at the market that raised $1 million, but we also included $4 million of short-term warrants. We've had great success with warrants historically, raising capital with much more lower dilution than public offerings. To some extent, this can be seen as an alternative to a $5 million public offering, priced at the money instead of at a discount. With this cash, along with our existing cash and our ATM facility, under which we've already raised $1 million during the first quarter, as well as with the efficiencies mentioned, we can confidently pursue the initiatives discussed by Joel on our pathway to profitability. I should note that we do not reprice warrants without careful consideration. We do everything we can to execute our initiatives such that warrants are exercised naturally. Now to the numbers. For the fourth quarter, revenue increased 70% to a quarterly record of $501,000. For the year, revenue increased 56% to $1.9 million. As Joel touched on, quarterly growth was driven by the market acceptance of our Evolve products and growth in e-commerce. Breaking it down by product, Evolve Rat was 52% of Q4 sales. Evolve Mouse represented 24%, while our historical ContraPest product was the remainder. For the year overall, Evolve Rat was 53% and Mouse 12%. From a product growth perspective, Evolve Rat was up 365% in Q4 from a year ago period, while there were no sales in Evolve Mouse in the year ago fourth quarter, as it was just launched in May of 2024. ContraPest was down 51% as customers convert to the Evolve solutions. Looking at revenues by channels, e-commerce represented our largest channel at 55% of our Q4 sales. This was followed up by pest management professionals and international distributors. As Joel mentioned, e-commerce growth has been extremely strong lately, with Q4 e-commerce sales up 206% from the year ago fourth quarter. With the addition of TractorSupply.com and hopefully others, we expect these screen trends to continue. As we said in the past, our Evolve product line represents a higher margin opportunity for SNES, and it is proving this out. Ever improving manufacturing operations give us both pricing and margin flexibility. Gross margin for this quarter was 61% compared to 44% in the year ago fourth quarter. From a dollar standpoint, gross profit dollars increased 136% in Q4 2024 compared to Q4 of last year. As I mentioned last quarter, we're also increasing production capacity to meet future demand. We have secured a newer, larger facility in Phoenix that will allow us to meet the next 5 years of increasing demand without dramatically increasing our facility costs. We expect to move to this location during the first half of this year. As you saw from the results, we continue to hold the line on OpEx as well, but are implementing a new series of optimization initiatives to further reduce expenses. The first is pausing new product development to focus exclusively on the commercialization and growth of Evolve Rat and Evolve Mouse. Second, we are bringing marketing, regulatory, and intellectual property functions in-house to reduce reliance on external consultants. And finally, we are optimizing our direct sales efforts, shifting to a more proactive approach focused on high-value customer acquisition in key customer segments, such as e-commerce and retail, and focusing on commission-only models such as distributors and manufacturer representatives. All told, we believe we will cut our cash burn by about 30%, from $1.5 million per quarter to about $1 million per quarter. These savings, coupled with the higher gross margins and is expected to move our cash flow break-even level to a little over $1.5 million per quarter. As we've discussed, this can be achieved very quickly with 1 or 2 big box sales, rapid expansion of brick and mortar, retail or municipal, or large-scale agricultural or international sales. We have any number of shots on goal coming up. With the revenue growth plans we have, higher gross margins, lower OpEx, and a strategic funding completed that can provide the funds necessary to achieve cash flow break-even, I believe we have reached that inflection point that many companies and investors are looking for. There is still execution work to be done, but the pathway is clear. Let me turn the call back to Joel. Joel?
Thanks, Tom. Just a couple of closing comments. We are committed to executing a focused strategy that positions SNES for sustainable long-term success by concentrating our most impactful growth areas, improving the cost efficiencies, and streamlining operations. We are taking decisive steps to achieve profitability. This is the inflection point everyone has been looking for, and we are on the pathway to achieving it. As the only manufacturer of U.S. EPA registered and accepted products for the reduction of reproductive capacity in rodents, we have a tremendous opportunity ahead of us to change the game of how the pest control industry municipalities, agriculture, warehousing, and consumers in general address the problem of rodent infestations. With Evolved and its improved form factor, economical price point, proven efficacy, and lengthy shelf life, we have addressed all the key product attribute requirements communicated to us by the industry. Our financial results are highlighting the progress made, and with initiatives in place to continuing driving rapid adoption of our innovative solutions, I believe we are in a great position as we enter 2025. Thank you to everyone for their time today. Operator, let's open the lines for questions.
Yes, sir. Thank you. If you'd like to ask a question, please press star then one on your telephone keypad. If you'd like to withdraw yourself from queue, please press star then two. Our first question today comes from Sameer Joshi with H.C. Wainwright. Please go ahead.
Hey, thanks. Good afternoon, Joel, Tom. Congrats on all the progress and the new initiatives for reducing costs, optimizing costs. Looks good.
Thank you.
Just a few questions. The opportunity in New York, you're shipping your first initial product for the pilot in April. Do you have some sort of visibility into how big it could get, and what over a period of time, say 6 to 8 to 9 months?
Yeah, so they're laying out the. They want to start the project April 27th. There's 2 10-block areas that they're going to focus on. Our technical people will be there with them, helping them assess where the bait station should be placed and the product placement. And then they're going to monitor those areas. And then as they see progress, they may add additional areas. So while it's hard to predict how much it could spread, we think that getting it on the ground floor in those areas, which will require some significant product usage itself, that we could see some really good opportunities there for growth by adding sections to it.
Yeah, no, that is a significant opportunity. But I think you also highlighted the e-commerce, the warehousing distribution channels as well, in addition to the online efforts. For warehousing, like what are your sales effort look like?
Well, in the warehousing sector, wherever there's food supplies, food production, right, there's the issue of how are you going to control rodents there, because rodents naturally like to go to the where the food is, but really there's not an opportunity to use a lot of the lethals there. So we had in September and October some good field tests that were done at some of the warehousing facilities. And now we're moving into where they're starting to order pallets of material to deploy the product there. So it's a huge marketplace with warehousing and distribution, and across the board in those areas, not only in food production but in storage of other types of products as well.
Understood. On the e-commerce front, I think more than 50% of your sales are coming from those platforms. Is this just word of mouth, like a pull, or is there any? Are you spending any ad dollars or awareness dollars on this?
Yeah, we have ad dollars we spend for Google ads and a lot of online search engine optimization and pay-per-clicks. And so really starting to hit our stride there. And, our Amazon sales were recorded their largest increase in quarter over quarter recently. And we're excited about that and just getting started on Tractor Supply. And we do have some programs on Walmart.com to help us gain traction and gain customers there in the short term.
Understood. One clarification question. Tom, I think, described the reduction from 1.5 million to 1 million on a quarterly basis. Was that the cash burn or was that the OPEX? I may have missed this, sorry.
That was cash burn for adjusted EBITDA.
Understood. Got it. And then one last one. I think in the press release you mentioned the lure bait dispenser. Is there anything, any visibility on how that offering is going, and what kind of contribution do you expect from that?
It's a great accessory item because it allows our product to be used in areas that would be hard to put a bait box. So if you're going to hang it in the attics or want to put it on a fence post, put it out in a garden. So while not a high revenue item because it's relatively inexpensive, it allows access to other areas that will allow more of our product to be used in those areas. But we just got back from some of these shows, and we've had a lot of interest and an unexpected amount of orders for the lure product in order to hold the product, so hold the Evolve product. So we're really excited about that.
Yeah, no, I think the dispensing technology has become more important than the product itself many times. So it's good to see that you're seeing that traction as well.
Yeah, and we have with our ContraPest product, we have the Elevate system, and so this is the Evolve equivalent of the Elevate system, and has really gotten the attention of those customers that want to put the product in unique areas.
Yeah, no, and I think even retail customers might find this attractive and easy to use. So sounds good. Thanks a lot for taking my questions.
Always good to talk to you.
Thank you. And as a reminder, if you'd like to ask a question, please press star then one at this time. We'll pause for just a moment to assemble our roster.
All right, operator, looks like no questions on the live call at the moment, so we'll jump over to the webcast. Joel, Tom, I've got a series of questions here. I'll just start working through them. First one here, and touched a little bit on this, but there's been a number of significant contracts signed in late 2024 and early 2025 here. Sort of talk about how long it is expected for these to sort of contribute to meaningful revenue growth, and is there any sort of a revenue forecast that you have for 2025?
Well, being a regulated product, the difficulty is how are you going to get state approval? How long does it take to get state approvals, local approvals? Sometimes when you get approvals, then they want to do field trials. So I think what you're seeing here is the results of work that we did in early and mid 2024 to get our product out in the hands of field personnel and regulatory personnel, do the necessary legwork in order to get it approved. And then once we get the product approved, then show the customers that want to use it within those marketplaces that it works, and they like to put their hands on it. So while I don't want to give a revenue forecast for the rest of this year, what I will say is that we were working really hard on some results from the things that we were doing a year ago. And we'll continue to see that because we had a lot of progress that was made in the middle and the end of 2024, which should bode well for us going forward.
Okay, great. Next question here, and you, I think, talked a little bit about this in your prepared remarks, but talk about some of the traction within the big box retailers here.
Well, we've had, Ace Hardware was really the first one that we talked with and said, yeah, we think that our stores and dealers would really like this product. And so that was a little less than a year ago. And we've gotten to the point where now we're under consideration to be put into their warehouses at their recent market that they have twice a year. The number of orders we got from this market over the other one was up about 1,000%. So we're in a really good spot there as we move forward. I think some of the .com e-commerce will lead to us getting into the brick and mortar stores and looking at both Tractor Supply and Walmart.com. The other big thing is that, as I mentioned in the remarks, we have some really well tied in rep agencies that are representing us at all of the big retailers. And so we're hoping to have some really good news on some developments there going forward in the near future.
Okay, great. Next question here. It says the review, case studies, and empirical evidence are all extremely positive for Evolve. It seems it's only a matter of getting the word out now. Is this also what you are seeing on your end, and how do you plan to deploy capital to increase awareness and sales?
Well, as Tom mentioned earlier, and we've had some improvements that we think we're making. We're streamlining some things. I think that what you see is we have a really good marketing plan for the year. So we're going to continue on with our marketing plans, being able to reach more of the end markets that we pursue. I mentioned municipality. Certainly, when we start deploying in New York City, and recently we just got an order from one of the areas within Chicago. You're going to see some good public relations campaigns built around those, because we think one of the most important things is that we got to be able to get the word out there on where it is working and how it's going. And once we do that, then you can start to see the landslide of others that are interested in it. So we're gonna keep up our plans to get the word out. We're on social media. We're going to continue to do the things necessary to drive business both to the e-commerce sites as well as through our distribution channels. And we're set up well in the distribution channels, and that once again is from the work that we did in 2024.
All right. Again, just quick reminder to everyone on the webcast player, if you have a question, you can type it into the question box there. And again, if you're dialed in live to the teleconference line there, you can press star, then 1 to ask a question. A couple more questions here for you, Joel and Tom. With a 60% gross margin now, can you lower the price of your products and increase sales enough to cover the lower margin? Talk sort of about the elasticity of demand.
Absolutely. So we're at a price point where we're right in line with competitive products that are within the industry. But we are looking at really ramping up revenue. So that may involve some discounts for larger orders from some of our distribution channels. And we think that once we get a regular cadence moving within our manufacturing facility, that we're going to be able to reduce the price out in the field as well as lower our cost and be able to hold those margins steady.
All right. Well, and that last point there, I think, dovetails into what may be the last question here. Are there any limitations or constraints to being able to manufacture and supply product for continuing these significant revenue increases? Are there cost savings to higher production levels?
Tom, you should take that one.
Okay, I would love to. No, we don't have the constraints. We've built our supply chain management and our manufacturing processes to be able to expand seamlessly into larger demand. As for the efficiencies, yes, absolutely. We've been working on that. The manufacturing team here in Arizona has done a very, very good job of, increasing batch size, reducing waste. They're always making improvements to the process. And as we move to our new location, we expect to be doing more and more of that. One of the things that is out there is that the larger you get in terms of your manufacturing process, the more automation options there are as well. And these are relatively low investment improvements to the process, and is explicit. To be honest, it is explicitly in the goals and objectives for the manufacturing team to find these efficiencies and find the automation and move forward to an ever improving manufacturing process.
All right, fantastic. I am showing no further questions. So, Joel, maybe I'll turn it over to you for any closing remarks.
Well, thanks once again for being online and listening to our story. We're excited about where we're at. We're excited about all the work that we did in 2024 that is going to pay off for us in 2025. And we feel that our near future is very, very bright. And we look forward to telling you all about it on our next conference call.
Thank you. This concludes today's presentation. You may now disconnect your lines and have a wonderful day.
Awesome. Well, the CC for SNES Tech, ticker SNES, just finished up. I think overall that CC conference call went very well, if you ask me. Personally, I think they are just getting over that hurdle of getting their product out there and testing it in their pilot areas, especially with some of these coming up. So they're on the verge. And there was a few questions that people had in there, and I think some of you guys may have too, is like how long, he didn't really answer it specifically, is how long it may last until they start seeing those sales increase. When I was looking at it, I think it's probably going to be within 6 months, just from my understanding of the product and how it works, maybe shorter for those pilot projects that they have going. But getting into the warehouse and all that was a huge hurdle for them. So now I think they're on the other side. Same with for getting on e-commerce. That's huge. I think that's going to be a huge significance for this company moving forward. So yeah, that's just my final thoughts. If you guys have anything, feel free to put them in here in the chat, and I'll check it out real quick before I log off. Stand by for a few seconds here. Alrighty. Well, looks like there's no comments coming in the chat, so I'm going to go ahead and end this stream. Hope you guys enjoyed it, and don't forget, tomorrow we will be having our pre-market prep live for you guys to tune into starting at 9 a.m., so don't miss that. Then we're going to do some live trading starting at 9:30 all the way till 10, and then at 10 a.m. is when we're going to be interviewing Joel, the CEO of SNES Tech that you just heard from on the conference call, and then we're going to follow it up with some more live trading. So don't miss out, guys. Turn notifications on so you don't miss out on tomorrow's morning bunch of action. So take care and look forward to seeing you guys tomorrow.